Hi everyone, this is Prashad Parthiban. Today I am going to explain the concept hazard in property and casualty insurance. In simple terms, hazard is nothing but increase the chance of loss. So if you have a scenario where certain external circumstances is increasing the chance of loss in a P&C insurance, then we call it as hazard. Let's look at it with some examples. Say you are driving a car and you have consumed alcohol. This consumption of alcohol increases the chance of accidents. Then that's what we call it as hazard. Certain things that you do which increases the loss, which increases the risk of loss, then we call it as hazard. Now hazard can be categorized into three main types. One is physical hazard, the second one is moral hazard, the third one is moral hazard. Now what is the difference? Let's see. If you take physical hazard, it's nothing but any physical condition that increase the risk of loss. So for example, right, if you have a home and if you have not maintained that home for a while, that means you could have some loss like water damage or no, etc., right? Something related to physical. That's what you give some examples, right? If you see like dead trees, you have dead trees and unfortunately due to wind or storm it fell in your home and it caused damage, right? Here the hazard is dead trees. If it's a dead trees, you should take away, right? You should not keep it there. Similarly, worn out tires. If your tires are not in good condition, it is very much likely that you will get into an accident due to your worn out tires. So anything that increase the chance of loss is called hazard. In that, if you say physical hazard, any physical nature, any physical condition that increase the chance of loss is called as physical hazard. The second one is moral hazard. This is nothing but insured acting dishonestly or intentionally. As I told you, like when insured is doing certain things knowingly, you call it as moral hazard. For example, setting their home on fire to collect insurance. They know that if the home is at loss, they get claim payment. Maybe for certain reasons the home is old or something, they wanted to collect a good claim payment. They intentionally set it on fire, or they fake the car accident, like even though the accident was not due to, no, it was not even an accident, but still they fake some kind of accident to collect payments. Something that is done intentionally so that they can get some benefit out of insurance, right? That is what it's called as moral hazard. The third kind of hazard is moral hazard, which is not like they have not acted anything dishonest or no intentionally. Carelessness, right? Like carelessness or less cautious, then it increases the chance of risk. That comes under moral hazard. For example, we all know sometimes we don't make sure to lock the car, we unlock the car and we go off and then got theft by somebody else, or neglecting home maintenance, right? After 10 years, if you don't maintain your roofs, etc., then there could be a possibility of leak. So this is due to negligence, the insured doesn't act on time, then it comes under moral hazard. So overall recap is, hazard is nothing but anything that you do that increases the chance of loss is called hazard, which has physical hazard, moral and moral hazard. Physical hazard is any physical condition that increases the chance of risk is called physical hazard. Moral is nothing but somebody acting intentionally or dishonestly to create or get a claim payment is moral hazard. Moral is nothing but carelessness or less cautiousness. Once again, thank you so much for your continuous support. Have a great day. Bye-bye.